All right, well, does Nvidia's slideshow signs that the AI trade might be unraveling? We want to talk about that with Kenny Polcari. He is Kace Capital Advisors managing partner, here to help us answer that question. Kenny, what do you think?
So I think it's way overblown. I don't think people need to be nervous about what's happening in Nvidia. They should not be surprised. The stock has done nothing but go up in a straight line. So a 13% pullback, yes, does represent a little bit of a sale. But quite honestly, you could see this thing drop another 5 or 8%. You know, if we saw a 20% pullback in Nvidia, I wouldn't be surprised at all. It's up 140% just this year alone. A lot of it driven by this AI theme and this AI mania, which, you know, on its own probably got a little bit ahead of itself. And so therefore, I would look at this, and I continue to tell clients, I would look at this as an opportunity, meaning take your time, be strategic. If you see further weakness, it's okay, because this is a long-term story about the future. This isn't about today or tomorrow.
And so with that in mind, if we see continued profit taking in Nvidia, is that a head for the exit sign for some who have been holding it for an extended period?
No, because look, I'm a perfect example of that. I've been holding it for over 2 years. This selling does nothing. It's not going to cause me to sell. Oh my God, I got to sell my Nvidia, right? I'm just not doing it. Quite honestly, I would use this weakness as an opportunity. But you also have to understand there's a couple of things happening. We're at the end of the quarter, right? So it's a quarter marking period. So you get a lot of big asset managers that are trying to reshuffle and rebalance. They got to show that they own some, but they use some of the profits to reallocate to other sectors. Sure. And so this is just normal risk management. And that's what individual investors need to understand. Look, Vanguard's been a buyer going into this quarter, but Fidelity's been a seller. They're both large asset managers, but they're buying and selling for different reasons. Doesn't mean Fidelity's getting rid of their position. They're just trimming some of it, where Vanguard says we see even more opportunity, so we're buying. So you have to think like an institution.
And what is, I guess, the appropriate risk management then? If you're an investor at home, how much of your portfolio should be allocated towards Nvidia, towards chip sector? Because that's the big question.
Okay, so that is a big question. And I actually put this in my note this morning. Look, I'm 63. Nvidia is 13% of my portfolio. And some asset managers would say, oh my God, that's way inappropriate for you because of my age. Well, guess what? It's not inappropriate for me because I'm the one who made that decision. I'm comfortable with that level of risk. If you're a 30-year-old, you may want to have 40% in the AI trade because you've got 30 years to go. But if you're 70, you may want to have, you know, a 5% or a 3% position because clearly you've got less time, and you don't want to risk it. So the answer to that question very much depends on who you are and where you are in the life cycle and on the risk scale.
I mean, we've tracked the run up in Nvidia, but if you're rotating out of Nvidia, what are the other areas that look appealing right now?
Well, listen, if you're rotating out of Nvidia, but you want to stay,
or at least reallocating some of the profits.
You want to reallocate them outside of tech, or do you want to, and take advantage of consumer staples or energy or financials, which are perfectly great sectors to rotate into, especially if you think that the AI trade is well ahead of itself and we're going to see some pullback and the market's going to hit a little bit of a rough patch over the summer, July and August, and maybe into September, which I actually think it's going to. So new money that I've been putting to work, I've actually not been chasing tech. I haven't been chasing, the AI trade, but I've been putting money into consumer staples, utilities. Utilities, the most boring sector in the world, is up 15% year to date.
A boring part of the AI trade too.
That's exactly right, and so there's huge opportunity there. So listen, I'm in this camp that you can't let, especially stuff like Nvidia, because it's not a small cap, unknown company. It's very much at the center of where the world is going. So for people to go, oh my God, I got to sell my Nvidia. Listen, when Bloomie's has a sale and dresses go on sale for 30%, you don't go in and return your clothes. You buy more because it's on sale. Right?
Yeah, that's a fair argument.
It's a fair argument. And that's why when people say, especially with names like Apple or Amazon, it goes down 10%, and you go, oh my God, I got to sell my... No. That's the wrong decision, So
I think investors are also just taking a step back right now. They're trying to figure out where we are right now within some of that enthusiasm, euphoria that we've seen within the market. So we have Nvidia, we have that story, but then also moving on, some of the other catalysts that investors need to keep on their radar. When it comes to the Fed, when it comes to that PCE print that we're going to be getting at the end of this week, we've also got the Russell rebalancing. So what do investors need to know?
So the Russell rebalancing happens on the same day. And so what investors have to understand about the Russell rebalancing, just like the S&P rebalancing last week, is that it says nothing about the market. All it does is the Russell has rebalanced the weightings of these small and mid-cap stocks that are in their different indexes to reflect the movement. So it says nothing about the overall market. It's going to create volume because there's going to be shifts in names, but it says nothing to you as an investor about should I get out of this name or into that name. Not at all. The PCE, which is the Fed's inflation gauge, is something that people will pay attention to. And trust me, it is expected to be softer, which would be a positive. But you really have to turn around and look at yourself and say to yourself, am I really feeling this decline in inflation? When you go to the supermarket, when you pay your utility bill, when you get your insurance bill, are you really seeing prices come in? Do you feel any better about the inflation picture? And that's kind of where the investor has to where the rubber meets the road.
You were talking about where there might be sales coming forward here. What are the three? Are there three names that you hope there are sales in some of the stock price action that we've seen recently?
Certainly in the tech space is where I'd like to see a lot of sales. Nvidia is right at the top of my list, right? I said I would love to see Nvidia back off because I want to buy more, not only for me, but I want to buy it also for clients. But I didn't want to chase it. I mean, look at the chart. It goes like this. It's ridiculous. I'd like to see it actually come back to trend line support is where I think it could absolutely test, and then where I think you could start to get in, right? But other names in that tech space, so AMD's a name. Micron's going to be, we're going to hear from Micron, right? Yeah. So that's going to be a potential name. Even Intel is a name that suddenly seems interesting. Palantir is another name in the tech space, right? But away from that, like I said, I'm looking at the other sectors. I like consumer staples because if I think that there's going to be a little bit of a rough patch over the summer into the fall, it's the things you need versus the things you want, right? So the staples are things you need. And so they continue to have some pricing power. And look, I think it's a safe place to put some money, still have exposure to the market. Some of them are very good dividend payers as well, so you get paid for owning it. Besides the fact, again, I'm 63, so it makes sense. If you're 22, maybe you don't want to be in consumer staples. Okay, great, I get it. But for me, and a lot of my clients, you need to have some stability and you need to understand what those different sectors represent in the broad portfolio.
All about a balanced approach.
Correct.
Kenny Polcari, always great to have you, especially here in studio. Thanks so much for joining us here today.